Hey guys, so I've explained this on a video before about how Head and Shoulders is annoying. It's a stupid indicator. It's not really an indicator. It's a formation you get on charts that people think are bullish or bearish, but it's pointless and it's frustrating when people fixate on it and they show me these charts and say, oh, I'm waiting for the right shoulder to form and then we're looking good. Forget about Head and Shoulder formations, okay? If you want to use TA, if you want to use these tools to become a more effective, efficient trader, learn how to use support and resistance to identify potential reversal points, to identify trends and reversals thereof. And an important key to that is Elliott Wave. I've talked before about Elliott Wave and explained how Elliott Wave is not supposed to predict where it's going to go. And some people who are critical of Elliott Wave will say, some Elliott Wave trader, tell me how Elliott Wave, show me one time where your Elliott Waves have ever predicted the exact price. First of all, I have charts just like this. BNB, all these Elliott Waves were drawn weeks ago, but there are times where it is very accurate. But keep in mind, all it is a visual representation of other indicators, stuff we already know. Support and resistance, Fibonacci, prior trading ranges. These are things that we already can see on the chart. Elliott Wave just connects the dots, and it goes from point A to point B to give you a visualization of that data. So here, I already know there's a potential reversal point because there's a strong resistance right here. Just by drawing a wave 1 and then a wave 2, that gives me a way to visualize, all right, I'm going to get rejected here and come back down and retrace a bit, and that'll give me an opportunity to see my indicators like my RSI come back down from overbought territory and retrace a little bit, reset so we can move up on the next wave. We don't need Elliott Wave to have all of that information. It just gives us a better way of understanding it and comprehending it to visualize it. Now, that being said, what is Head and Shoulders, and why is it a stupid and useless concept? Simple. It's redundant. If you understand support resistance and you use tools like Elliott Wave, there's no reason to look for Head and Shoulders formations. And let me give you an example why. I wasn't even planning on showing you this. I just happened to have this up on the screen. I was going to actually go through my list and check out some coins on my watch list to find an example. Sure enough, the first chart I have up on the screen is a perfect example. What do you see right here? You see an ABC correction, right? That's an ABC. It's a zigzag wave. That's a correction, Elliott Wave correction wave on BNB. After it corrects, what happens next? You get your next motive wave, right? Starting the next impulse wave, we're going to have the first motive wave, wave 1. In this case, this is the subwave count. So now we have an ABC correction, and now we have the subwave count with wave 1 to start. What is this forming? What do you see right there? What is that first turn, the drop to the end of the correction, and then the start of the next impulse form? Then another correction, and then it moves up. That is your Head and Shoulders. Right there. That is exactly what you're seeing when you tell me that you've spotted a Head and Shoulders on a chart. Right there. So, again, it's redundant. Using Elliott Wave, in this case using Fibonacci, prior trading ranges, using support and resistance, I've identified numerous support and resistance levels on this chart. And using that data, I'm able to estimate and predict and model where I believe potential targets and trend reversals are. And visualizing that data with a tool like Elliott Wave, I can see that exact formation. So when you show me this chart that's completely empty, right? And all you do, it doesn't look that clear cut here, but it doesn't look like as nice of a Head and Shoulders. But so if you say here's an inverted Head and Shoulders, there's your first shoulder and your head, neck, and then your next shoulder. If you send me just this, my first thought is, all right, well, that's probably going to be a correction, and then the subsequent impulse wave. And sure enough, that's what it is. If you chart it out with Elliott Wave, you're seeing exactly that. That's why inverted Head and Shoulders aren't a bullish signal to me. All it is, when you show me that you've spotted an inverted Head and Shoulders, all that's telling me is that you don't know how to use support and resistance in Elliott Wave to visualize potential trends and support and resistance levels, because if you did, you'd be telling me that this is a potential spot where we could see a strong impulse wave after a correction. That's the way you would see it. So when you tell me you see an inverted Head and Shoulders, what I hear in my head is, oh, I see a correction and a potential impulse wave coming out of that correction, so that's what I'm going to look for. I'm not going to necessarily look for a shape that resembles a head and shoulders with two necks and with two shoulders and a neck. Anyway, I keep telling everybody to ignore head and shoulders and focus on what the actual data behind it is telling you, and hopefully that's a good explanation. Good luck.